Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about USDCHF. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong, significant monthly support and demand area. From here, in fact, all this previous rejection to the upside was created, and at the moment the market is testing the exact same zone, has already started rejecting it to the upside, and in a situation like this, more bullish price action could be expected away from this area. So from a monthly standpoint, everything seems quite bullish, and we could expect a potential rejection to the upside with a double bottom firming exactly at this zone. We can also notice that if we zoom out and we look at the past price action, this is also an area from which a very strong rejection to the upside has already happened in the past. In fact, from here, all this previous move to the upside was created, then here the market respected the zone again as support. Now the market is testing it yet again. So there is again the possibility of another rejection to the upside being created, as already happened in the past when the market was testing the exact same zone and followed with a massive rejection to the upside. Now, dropping down on the weekly time frame, what we can see is that we're starting to have a deceleration at this area. In fact, the market started out quite bearish. We had massive bearish momentum with clearly sellers that were in control of this market. However, now, every time the market is creating a push to the downside, immediately new sellers are coming into the market, creating these green candles. This means that essentially there is an exhaustion pattern building up here from a weekly standpoint, which increases the probabilities of a potential rejection to the upside away from this zone. Now, if we drop down on the daily time frame, what do we see? Well, from a daily standpoint, what we can notice is that we just had quite few rejections away from this zone. We can see the first one here, the second one here, third one here, fourth one here, and now the market is starting to create higher lows. We can notice, in fact, how we had the first low here, the higher low here. Now the market is trying to form yet another higher low and potentially a new daily higher high away from the area. However, if we look at the structure of the market, we can also notice how the market is currently bounded in this range. We have the top of the range here from a daily perspective and the bottom of the range here. Until the market will remain in between these two levels, we could simply expect to see more horizontal price action developing in between these areas. So things, at least at the moment, unless we will see a breakout from this range, don't seem too interesting. So let's go and see what we have when it comes to the commitment of traders, so what big players in the market are doing, so essentially the non-commercials. Now, if we look at the data precisely for the CHF, what we can notice is that with the last reports, net positions have been increased quite a bit. We went from having minus 49.7k net positions all the way up to minus 21.3k net positions. This shows how institutions in the long run have been moving back to the bullish side of the CHF, therefore making it stronger. And this is not a surprise, because USDCHF has been trending to the downside quite aggressively, fueled by this institutional longing of the CHF, because keep in mind that all currencies on the spot are traded against the USD. So if institutions are longing the CHF, they are essentially shorting USDCHF, which in fact has been trending lower. However, we can start to see how already with the two reports, no new longs are getting added from an institutional perspective on the CHF, meaning that the profit taking of this shift to the bullish side seems to have started. And if institutions will stop longing the CHF, so shorting USDCHF, at that point there is the possibility to see the bottom form at this zone, and that double bottom from a monthly standpoint that we have just identified potentially be created. So this area will be quite important because we have to check if the market will actually manage to break out from this range to the upside. In my opinion, if the market does break above this level, at that point on the retest of the previous resistance turn support, that is where there is good probability of seeing institutional longing of USDCHF, so institutional shorting of the CHF, which at that point could further increase the probabilities of a potential rejection to the upside away from this zone. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in the description, so you never miss new updates. Now back to the analysis. So in a situation like this, if the market will then go and retest this area, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside that definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that there is, and I have created this with all the effort that I could put into it. Directly, as soon as you open here the page, you will see a complete video presentation of everything included and how the entire program is structured. In it, you will find all my courses, the VIP Telegram signals, plus the video explanation. So essentially directly copied from my trading account. You will have the possibility to have one-on-one private mentoring directly with me included all in the program. The trading station software with the Telegram notifications integration. So a complete tool giving you everything that you need as a trader when it comes to the software that can assist you with your trading. You will also gain access to the COT data software, which is the one that we used in this analysis. And if you continue to scroll down, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the checkout process. So definitely looking forward to seeing you on board. The link is in description, and I will see you on your student dashboard. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.